Ladies and gentlemen, good day and welcome to the Q4 and FY22 earnings conference call for Apcotex Industries Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star followed by 0 on your touchtone phone. Please note that this conference is being recorded. At this time, I would like to hand over the conference to Mr. Anuj Sonpal, CEO of Valorem Advisors. Thank you, and over to you, sir.
Warm welcome to you all. We represent the investor relations for Apcotex Industries Limited. On behalf of the company, I would like to thank you all for participating in the company's earnings conference call for the fourth quarter and financial year ended 2022. Before we begin, let me mention a short cautionary statement. Some of the statements made in today's earnings conference call may be forward-looking in nature. Such forward-looking statements are subject to risks and uncertainties that could cause actual results to differ from those anticipated. Such statements are based on management's beliefs as well as assumptions made by and information currently available to management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings conference call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. Now let me introduce you to the management participating with us in today's earnings call. We have with us Mr. Abhiraj Choksey, Managing Director, Mr. Sachin Karwa, Chief Financial Officer, and Mr. Anand Kumashi, Company Secretary. Now without any further delay, I request Mr. Sachin Karwa to give his opening remarks. And over to you, sir.
Thank you, Anuj. Good evening and welcome everyone to this earnings conference call for the fourth quarter and full year of financial year 2022. Along with me in today's earnings call, I have our Managing Director, Mr. Abhiraj Choksey, and Mr. Anand Kumashi, the Company Secretary. I hope you had an opportunity to review the financial statement and earnings presentations, which have been circulated and uploaded on the website and the stock exchanges. To brief you on the financial performance for the fourth quarter of financial year 2022, we had strong growth on year-on-year basis and also on quarter-on-quarter basis. The company has reached historical highs in Q4 FY22 across all the financial parameters. In Q4 FY22, the revenue from operations grew by about 48.5% on year-on-year basis to around 278 crore. The EBITDA grew by 51% on year-on-year basis to around 45 crore, with EBITDA margins reported at 16.32%. Net profit grew by 37% on year-on-year basis to rupees 31 crore, and PAT margins were reported 11.14%. For the financial year ended 2022, the revenue from operations grew by 77% on year-on-year basis to around 957 crore, while EBITDA grew more than 100% to around 140 crore, with EBITDA margins of 14.61%. And the net profit also grew by 100% to rupees 99 crore, with PAT margin of 10.33%. The growth in fourth quarter and for the year was driven by strong volume across all the industries, geographies, product groups, and also increase in realization. Export contribution grew to 21% of the overall revenue. On the CapEx side, the work on new expansion project is running on schedule and is expected to be completed in Q3 of FY23. Lastly, the company has recommended a final dividend of rupees 3 per equity share, making total dividend for FY22 to rupees 5 per equity share. With this, I would like to open the call for question and answer session. Thank you.
Thank you,
Thank you, Sachin, and thank you, Anuj.
Yes. Participants who would like to ask a question may press star and 1 on your touchtone telephone. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have the first question from the line of Mr. Ankit Kanodia from Smart Sync Services. Please go ahead.
Thank you. I think 4 years ago in Q4 FY2018, one of the participants asked you about growth rates and vision of the company. So I would just like to share what the management said at that point of time, that our first target is 1,000 crores turnover. As I said, our vision is not so much in numbers that we want to be a 5,000 crore company or 10,000 crore company. Our vision is more towards where we want to be and wherever we are, and aggressively grow in technologies that we understand. Now, unlike some other markets where growth is 40 to 50% a year, and you can think of 10x in 5 years, it is not the case in current product ranges that we are in. So it's 4 years, and we are now close to 1,000 crores. So just your views as to how would you rate your performance given there was a year of pandemic in between, and if I would like to repeat the same question today, what would be your thoughts on the next few years in terms of how we are today compared to the past? If you can give some color.
Yeah, thank you. Thank you, Ankit. Thanks for reminding me what we said in 2018. So we feel pretty happy and where we are today. Obviously, there have been challenges. I think 2018-19 was a difficult year for us. 2019-20 was a difficult year for us, and of course 2021 started off very difficult with the lockdown in India. But post that, I would say from Q2 of FY2021, so almost 7 quarters in a row, we have taken a lot of steps. We've learned a lot through COVID. We've made our plants flexible. We had a huge thrust on our, sales and marketing. A lot of customers that we were both in India and abroad that we were looking to get approvals from. A lot of that has come through, and obviously you're seeing that in the results. We're running at 100% capacity utilization right now. Even the debottlenecking projects that we took up, in this financial year, earlier in the financial year, are fully utilized now. So we feel very happy where we are. Of course, post-COVID, there was a lot of uncertainty, and we were also wary of the risk of the uncertainty. But we took some bold calls in the last year and a half, and that has paid off. So we feel happy. Going forward, just the products that we have, I think there is potential to grow this business to over the next 5 years to maybe 2 to 2.5 times the current revenue. Again, I just want to quickly mention, and I mentioned this many times, that look, revenue is a number that of course feels good when you reach 1,000 crores, 1,500 crores tomorrow, 2,000 crores. But we focus more on our volumes, because in our kind of business, given the huge volatility that oil prices and therefore the downstream petrochemicals, which are our main raw materials, so revenue can vary. So for example, again, if oil falls to half, then you could see a dip in revenue. But what we are more interested in is focusing on our EBITDA margins, on our contribution margins, and of course per ton margins as well, more than anything. So I hope answers your question.
Thank you so much. That really helped. And in terms of EBITDA margin or EBITDA per ton, as we understand, EBITDA per ton is a much better figure for us, metric for us to look. I think it would be fair to say that we are still among all-time high in that number. I mean, close to all-time high.
Yes, we would be overall at a pretty high number. Yes. Okay.
Any ballpark? I mean, 10%, 20% below high, or what would you like to quantify that? I mean, how?
Well, I'll just say that our EBITDA per ton for the financial year is up by a good double-digit margin, around 40-50, almost 50% for the year, and for the quarter is up by also 20-25, 22%, I think, between 20 and 25%.
But that would be compared to the last year, which was a pandemic hit year. If we compare it with 2018 or 19 pre-pandemic period, would we be close to all-time high?
Yeah, for sure, yes. We would be higher compared to 18-19 as well.
Okay, one last question before I go back to the queue. In terms of ApcoBuild, I think last time we mentioned about Maharashtra, Gujarat, Madhya Pradesh, and Goa was the latest state we entered. Have we added any more states, or we are still focusing on these ones?
No, mainly these 4 states right now.
And in terms of volumes of ApcoBuild in this quarter, would you like to give any growth rate?
I would say for the year for ApcoBuild, we are, in terms of volumes, higher by more than 100%. I think 120, 130%. So we feel, as I said, it's still a small part of a business, and we don't give out numbers separately for ApcoBuild. But as and when it becomes, we feel it is a reasonable portion, we will talk about it more. But as of now, we're very happy with the development in our sort of construction chemical B2C as well.
Okay. Thank you so much. I have a few questions, but I'll come back in the queue. Thank you.
Thank you, Ankit.
Thank you. Participants are advised to ask 2 questions. Participants are advised that they may ask 2 questions to the management. We have the next question from the line of Farooq Pandole from Avastha Fund Management. Please go ahead.
Yeah, hi Abhiraj. Congratulations on the great results. And I hope that we are building up momentum for the future and confidence for the future as we go along. I had questions. My first question, you mentioned to the earlier sort of caller, you mentioned focusing on margins rather than on revenues. And I just wanted to get some sense of, in light of where oil prices are and what has happened with oil prices over the last year, what sort of do you feel like the full year margin is a more sustainable margin with the expansion, etc.? Is the current quarter margin something that we should be aspiring to? So some color basically on the sustainability of margins going forward. And my second set of questions was on the CapEx, both for the gloves, latex capacity, and I noted with that we've extended our sort of commissioning date further another 3 months. We're now talking about December of this year. So there has been a pushback of few quarters over time. And also, if your answer to me in the last quarter on the NBR project, if there has been any change in the last 3 months to make you sort of evaluate that project any differently from the sort of response you gave us in the last quarter.
Sure. So I'll take it one by one. The easy one is CapEx. So frankly, we are not delayed really. I had said that it would be around towards the end of the second quarter. So just to be conservative, we're just saying Q3 because while today there are no delays, but you all know the situation with the supply chain and availability of a lot of materials, not only raw materials for our product, but even capital goods. There's been a huge demand for capital goods. So in case there is a delay, it would not be on account of anything sort of we have not internally. It's really on account of any delays that the suppliers, there may be a delay of a month or so, but certainly not a quarter. And so we are saying in Q3, but we are hopeful that, one project would be even end of Q2 and the second project would be in Taloja would be early Q3. So I think we're just being conservative given what's happening in the world today. So therefore, we mentioned Q3.
Yeah. So we will see some revenue in Q2 and then maybe more revenue in Q3 and then so on and so forth going forward.
I had always mentioned that Q2 would be, end of Q2 would be the commissioning is from what I recall at least. And for one of our projects, yes, that would start kicking in from Q3, but obviously it will not be overnight 100%. It would build up over, we hope 6 months, but it could take a little longer because some of the reapproval cycles, from a new plant even for our existing customers, they would want to test it out for a couple 2-3 months before completely moving whole hog, So that does take time. And so you'd see some of it in Q3 and some of it, and then from Q4, of course, both the plants will be completely ready. And then it will depend on how quickly we're able to ramp up and, complete the reapproval cycles with a lot of our customers. And and we'll have had to add new customers as well. Unfortunately, there are customers that are asking us for material, but we're not able to go through the approval cycle because we just don't have material to give them. Even, a few tons we don't have today. So the demand cycle is quite strong, and so we're focusing on the current customers that we have been working with for the last year or two strategically. At least we feel that's important. So yes, that's on the capex front. As far as margins being sustainable, look, I've always said there could be a quarter or two where, suddenly if there's a crash, then we could be stuck with some high cost raw materials. There's a crash on oil prices and subsequent petrochemicals. But on average, we have, over the last few years, barring maybe 1 year in the middle, we have consistently grown on our EBITDA margins, percentage-wise, and certainly on the EBITDA per ton. And that will be our endeavor. Yes, there have been tailwinds in the last 6-8 months that I must admit. For example, there's really been no crash, let's say, in the last 6 quarters. So that's obviously helped us. The last quarter, for example, we did have some inventory gains due to the war. Suddenly oil spiked, all our petrochemical prices, the raw materials spiked, but we had some good buying that we had done in December and January and February and so on. So obviously that, to some extent, I would say maybe about 10-12% of our profits were due to that factor as well. But we are quite confident that with the set of customers we've built, as long as the macro picture and the macro environment is strong, we feel pretty confident of sustaining these margins in the long term. Again, I just to clarify, there could be 1 or 2 quarters where margins will fall, but our endeavor is to stay between this 13 and 17% margin numbers,
Sure.
And your last...
On the NBR?
Yeah, your last question on NBR, we are waiting on the final environmental clearance for our NBR project, which should come through. We're expecting this quarter, by the end of this quarter, after which we need to take a call. We feel bullish, as I said, but we haven't taken a final call. I'm sorry, there's no major update. Our focus is just to get these 2 projects off the ground in the next 6 months, and hopefully, as and when we take a call, I'll let you know. Sure. But it's certainly, as part of our strategic plan, it is on the cards.
Excellent. Thanks a lot.
And one more thing that's changed, I just want to mention is that commodity prices and capex costs have significantly increased in the last 3 to 4 months, as you can imagine. So we would have to reevaluate the IRRs of the project and actually take a call, because we're very conscious of allocating the right amount of capital, and we don't want to do it in a cycle which is at the peak. And we're not sure. We may choose to wait. I don't know if that's a smart thing, sure. But we'll reevaluate the IRRs once we get our environmental approval, see what the commodity prices are then. And when I say commodity, I mean steel, cement, all the commodities that are required for big capex, and then take a call.
Sure. And how much money have we spent on the gloves capacity that we are planning for the 3rd quarter?
So just to clarify, we are doing 2 projects, one in Valia, one in Taloja. The one in Valia is completely for gloves. There will be some flexibility that we'll try and build in, and the one in Taloja is a multi-purpose latex plant. And at this stage, we're not sure, depending on, again, the margins, we can use it for our styrene butadiene latex products that go into carpet construction, paper, and so on, or use it for nitrile latex for gloves. So I just want to clarify that. Sorry, what was your question?
So I think we were talking about 150 crores, if I'm not mistaken. And so how much of that has already been spent, and how much is balanced?
Oh yes, how much has been spent? So the cash outflow up to March 31st, out of a total project size is about 190 odd crores between both plants, and we are investing in a zero liquid discharge plant in Valia as well. So everything put together, out of which we would have spent about 40%.
Okay, got it.
Yeah.
Okay.
But that's cash outflow, yeah. Everything, all this will be obviously commissioned when it'll hit the balance sheet only when we commission the project.
Of course. Great.
Yeah.
Thanks a lot, and good luck for the next year.
Thank you, Farooq.
Thank you. We have the next question from the line of Mr. Karan from AMSEC. Please go ahead.
Hi, sir. Thank you for the opportunity. Am I audible?
Yes, we can hear you.
Yes. So just wanted to have some understanding with respect to our product mix. between two broader categories, latex and rubber?
Yeah, it remains about the same, which I had mentioned last time. Around I would say about 55 to 60% is latex, maybe around 56, 57%. The rest is all the rubber products, which are solid polymers. The liquid polymers or latex is about 56, 57%.
Got it. And like you mentioned that we are already running at peak utilizations, even on a debottlenecking exercise. So how are we preparing for the volume growth for the near to medium term?
But for the short term, we are unfortunately, it's a good problem to have, but we don't have capacity, and the new capacity will all start coming on stream from Q3 onwards.
But so we were working on some incremental capex, for latex as well. So are we on with the plan?
Yeah, I mean I don't know what you mean by incremental capex. That was done last year. Last year, meaning in the middle of 2021, we finished that. That was small debottlenecking projects to the extent of 10-15 crores investment, which we already completed, and that is already on stream and fully utilized. Now we don't have any incremental plan. It will be our two big projects, which are coming on stream between both our plants for latex.
Got it. Yeah, that was helpful. I'll come back in a bit. Thank you.
Okay, thank you.
Thank you. We have the next question from the line of Prathamesh from Axis Securities. Please go ahead. Mr. Prathamesh, can you hear us? This is the operator. Mr. Prathamesh, can you hear us? We will move on to the next question in the meanwhile. I now invite Mr. Satish Kumar from NB Investments. Please go ahead.
Hello, can you hear me?
Yes, we can hear you.
Yes, Mr. Satish, we can hear you.
Congratulations, Abhiraj, for a wonderful performance. Sir, I have few questions. The first one is the Valia XNB latex which you are doing. I think you have plans to do in two phases, phase 1 and 2. Just wanted to know the environmental approval what you have, EC approval, sorry. Is it for both the phases we have got?
Yes, we will have the full approval by the end of this quarter. So for both phases, we will have it by the end of this quarter.
Oh, for the phase 2 we don't have as of now.
No, but we'll have it. But that phase 2 decision we have not taken. That's something we'll take next year anyway, once we have utilized the first phase or close to utilizing the first phase. So we have enough time.
And this NBR you are sounding it may take more time, that's right?
I mean, the decision, we're waiting for the environmental clearance, and then after that we will take a decision, as I said, as I was explaining to one of the previous callers, that it will depend at that time on what the capex.
No, I was saying, when are you expecting the EC approval for NBR?
Same, this quarter, altogether.
Altogether, both are expected, right?
Yeah.
Okay. On a quarter-to-quarter basis, the sales have gone up by 11%. Is it possible to give us in terms of volume and value growth?
Well, I would say, yes, I think I have those numbers. If you can give me a second. I mean, while we don't give exact volume numbers, okay. I would say, yes, 11% is a value growth, out of which 7 out of 11% is volume. The remaining 4% is because of sort of price increases or raw material increases, which led to price increase.
Okay. Now that you are saying that, we are already running at without any more increase in the raw material prices. So this 270 to 280 crores of, run rate per quarter is what we can expect during the first half of the current financial year?
That's correct. That is correct. Of course, again, to qualify, it depends on oil and downstream petrochemical prices. For whatever reason, if oil falls, then revenue can fall also.
Can fall off. But if you can throw some light how it has behaved during this last 1 month?
It has gone up further. It's consistently gone up since, I would say, February. Now I think there are some talks of some respite.
But I would say last 3 months, 4 months in a row, mainly due to the war. First, it was post-COVID, obviously the bull run on goods and some of our products, and then the war in Ukraine caused a sudden spike in oil prices, which resulted in all petrochemicals, I think, going up substantially.
Okay. Since you said war, so this war in Ukraine is having any impact for the company in terms of, let's say, the sales, the raw material availability, or freight rates, container, anything it has affected other than increase in the crude prices?
Well, two things. One is directly we don't have much business in Russia or Ukraine. We do have small business, but it's a very small percentage. So yes, certainly that has been temporarily affected. We don't buy any raw materials from Russia and Ukraine directly, so that's really no impact to us. But overall, like everyone else, I think the whole world is facing this issue because of the China COVID situation and the war in Ukraine and Russia. A lot of containers are stuck. Shipping rates are going up and up and up, further up, more than the rates. Availability is an issue. So I would say in terms of risk and really our focus these days is managing the supply chain and ensuring, because a large chunk of our raw materials are imported. So ensuring that all of the imports come in on time. We have, of course, a lot of delays are there already, but we have increased our inventory cycles, developed vendors in different areas who had anticipated this. So far we have not faced any major raw material shortage issues, but it remains a very high risk for the next 1 year. And as far as exports as well, right? We are responsible to ensure that our materials reach our export customers on time, and that has also been a challenge. That remains a risk going forward, and I think it will remain a risk for the next 6 months at least.
So in spite of all these challenges, are we in a position
Mr. Kumar, we would request you to please come for the follow-up question in the queue, as we have other participants connected.
Let Mr. Kumar finish one question. Mr. Kumar, go ahead. You are already asking for it.
Yeah. So what I want to know is, because of all these challenges you mentioned, going ahead, are we in a position to protect our margins?
We feel pretty confident that we can. We have developed a set of products, a set of customers that are now quite sticky. And as I said, look, there could be a sudden situation where for 1 quarter or a few months where there's sudden drop in prices and we are stuck with some high cost raw material inventory because we have no choice but to stock up on imported raw material. So that could happen. But in the long term, I think as a business, we have grown from strength to strength. We have grown our volumes, we've grown our customer base, we've grown our geographic base. Within customers, we've increased market share. Overall, we've increased market share. We've gone into new industries and fields that we were not in. So we've done a lot of work over the last 3-4 years. So we feel pretty confident in the long run that these kinds of margins between, as I've always said, between 13 and 17% are sustainable. And we focus on EBITDA per ton. And so I think the bottom line numbers is what we focus on, and I think we feel confident that it is sustainable in the long run. Again, to repeat for the 4th time, quarter on quarter we could have hit. I'm not sure.
All the best. I'll come back in the queue. Thank you.
Thank you very much, Mr. Kumar.
Thank you. We have the next question from the line of Nikhil from Perpetual Investment Advisors. Please go ahead.
Hi, Abhiraj and team. Congrats on a great set again. I have a few questions on the broader industry structure. So firstly, on the Ukraine-Russia war, since there is a lot of synthetic rubber production capacity in Russia, do you see any permanent opportunities emerging out of this? Or do they get route through China or some other country?
Thank you. Thank you, Nikhil, first of all, for your wishes. Hard to say. I don't think anything is permanent in the world. So I think at some point the war will end and Russia will come back on stream. But sure, right now, because of all these bans on Russian materials from Europe, America, also on the supply side, a lot of raw materials that Russia was importing, they're having challenges with that. I think in the next 3 to 6 months, sure, a lot of synthetic rubber that is coming out of Russia seems to be affected. I don't know how long that will last. As you know, oil from Russia is flowing, oil and gas is flowing fairly smoothly, from what I understand, into Europe and other parts of the world. Maybe in a few months, all other materials also flow. But as I said, that can be some short-term advantage, but that's fine. I mean, we don't really focus on that. Our business is not dependent on what happens in Russia.
Okay. And so on the latex side also, now Synthomer has shut down 2 of their facilities in Europe. I think it's probably due to high cost base. So do you see any change in industry structure even on the latex side?
Look, all I can say is demand has been very strong for us. Whether that is the reason, I don't know. It could be partly, but I think if I were to venture a guess, it's really, I would say, whether or not that event happened or not, I would say what we have done and the way we have sort of grown in customers in India and abroad since we're talking about Europe, I think that would have happened anyway. Sure, structurally right now, for various reasons, margins are very strong, demand is very strong. I'm not sure what will happen. You know what is happening in the macro environment, inflation going up, that's likely, all economic reports are saying that's likely to affect overall consumption and therefore demand of goods in the next 6 to 1 year. That will affect us, that will affect the world and all companies,
Got it. So, I mean, we are on the good side. If irrespective of these plants shutting down, we would have delivered the same numbers. So that's assuring.
I think so. And if you see the last 6-7 quarters, I mean, we have delivered quarter on quarter, no matter what's happening in the world, whether there was a second wave in India, no matter what's happening in China, no matter what's happening due to the war, all these bans of Russian material by US, Europe, we have sort of kept our heads down and sort of focused on our business. And sure, there are some tailwinds, as I mentioned, right now for sure. Whether they last or not, we are quite confident that we are quite happy with where the business is.
Okay. So I have 2 more questions. I'll put it quickly. Is any update on the cases at CSTAT? And as part of the acquisition at Valia, do we also get access to technology for other products?
The appeal process is on in CSTAT, and there are not only us, but many other companies, maybe 50, 60 other companies that were affected by the same ruling in various different industries, from pharma to chemicals to steel to everything. So I think that will take some time in India, the whole legal process. And as far as technology is concerned, certainly when we acquired the company, one of the while it was adjacent technology to us and we understood it well, there were certainly some nuances of the technology and some new things we learned, which now we can take for and use it for newer products, and we are working on it with our R&D team.
Okay, hoping to hear about that probably in coming quarters from you.
Yeah, I think frankly our hands are full with our current project in the current context, but yes, hopefully in the next few quarters, when we make some progress, we'll keep you posted.
Yes, thank you.
Thank you, Mr.
Thank you very much. Thank you, Mr. Nikhil.
We have the next question from the line of Alisha Mahawal from Envision Capital. Please go ahead.
Hi, sir. Good evening, and thank you for taking my question. While you did mention slightly earlier in the call that the EBITDA per ton has gone up substantially if we see from a YOY perspective, is it possible to quantify what has been the increase on Q-on-Q basis?
You mean Q3 over Q4 or
yes.
Q4 compared to Q?
No, Q4 over Q3.
Q4 over Q3. I'm not sure if I have that number ready with me. Sachin, if you're on the call, and I am not sure if you have the number. Sorry, we're not in the same location, so maybe my finance team can come up with a percentage. Q4 over Q3, if you have the number. If you don't immediately, then we can get back to Anisha after the call.
Yeah,
but sorry, go ahead.
Yeah, so approximately 20%.
No. She's not asking Q4 over Q4 of last year. She's asking Q4 over Q3. I don't think is it 20%?
Yeah.
Okay.
So if I may take this question further, what is driving this improvement in EBITDA per ton? Is it a particular product that is doing exceptionally well for us, or because if this is the kind of growth we're seeing on Q basis, it would be I think it'd be great for us also to understand where it's coming from.
Look, partly it's coming from overall strong demand. We have been at 100% capacity utilization for the last couple of quarters. We were able to pass along the price increase and do a little bit better. We were able to renegotiate some of our contracts, as I mentioned. We've also had tailwinds in the sense, as I mentioned, some amount of it would be because of some amount of stock profit that we would have had from buying raw materials at a good rate, back in December, Jan, February. And then, of course, we saw Feb, March, prices shooting. So partly a couple of reasons, but I'm sorry, I'm just asking Sachin this question again.
Sachin, 21% is Q4 over Q4 in EBITDA per ton increase. I don't think Q4 over Q3 would be that much, but anyway, if you are saying so, it must be true. So I just wanted to reach.
No. Q3 is higher. It's 25%. I just missed it. Yeah.
Okay. Yeah. So anyway, I think Anisha, broadly, it's improved, I would say, but these are the reasons why, what I just mentioned.
Sure. And again, with respect to what you were saying earlier, even if crude does correct, the EBITDA per ton that we are currently enjoying, which is 50% higher YOY or 20% higher Q on Q, the absolute EBITDA per ton we're confident of maintaining.
Yes, under the current context, yes. But as I said, the macro pictures, at least for the next 1 or 2 quarters, things look quite strong. But with inflation and the macro picture turning, I don't know, what would happen. Maybe, but as I said, our endeavor would be to always improve on EBITDA per ton.
Understood.
And as we grow, in our kind of business, the fixed costs are lower. So sometimes even the contribution per ton may drop. When I say contribution, gross contribution per ton, the EBITDA per ton may still go up. So yes, that would be our endeavor to keep improving on that.
Understood. And just coming very quickly.
Ma'am, this is the operator. We request you to kindly join the queue for follow-up questions.
But I just finished my first.
Yeah, go ahead. Finish your last question. Finish your last question.
Thanks. With respect to the gross, I think about 38%. Is this number a sustainable number? Because it is on the higher end if you compare it to the previous quarters. And just wanted to understand if, or is this the benefit of some low-cost inventory that we were carrying?
There is certainly benefit of low-cost inventory.
Understood. Great.
Is it sustainable? I'm not sure. It has been one of the highest numbers, so I'm not sure. But as I said, EBITDA per ton and EBITDA percentage, we'll try and keep it at this 14 to 17% range. Hopefully, we won't drop them to 14, but at least 13 to 17% range, and increase it further, hopefully.
Great. Thank you so much. I'll join back the queue.
Thank you.
Thank you. We have the next question from the line of Kamlesh Kota from AMSEC. Please go ahead.
Hi. Good evening, everyone. Firstly, congratulations for a wonderful execution, sir. I have 2 points just to have your thoughts. One is, I don't know whether you spell it out or I missed it. How much of the growth is volume and value for this quarter out of 48% growth that we reached, sir?
About half is because of volume.
Okay.
So about 24-25% is about that. Yeah.
Okay. Secondly, if I have to just dissect the strong growth that we have seen in the revenue as an extension of that, are we gaining market share from the players domestically, or is it that the imports are getting prohibitive because of the global supply chain dislocation? What is driving the strong growth? Is it either of the 2 factors?
I think it's both external and internal. As you said, certainly imports have become harder for everyone, and everyone prefers local supply. So as far as the India market is concerned, which is almost 80% of our total turnover,
right,
we have certainly benefited from imports being more expensive due to higher shipping rates, higher detention charges, and so on. Availability is also an issue in many cases. So we have certainly benefited, but that's the external factor. On the internal side, we have done so much work over the last 5 years, 6 years since we acquired Omnova Solutions India, in our Valia plant as well as in our older business in Taloja. And so we have grown market share across the board. And at this point, I'm fairly confident that across all the product categories that we have, almost all, I would say, we are number one in India, or a joint number one. Let me put it this way, where market share is very close to somebody else. So we're quite confident. And this, if you compare this to about 5-6 years ago, I would say we were number one in a few categories, but a strong number 2 in most categories. So I think we have grown market share here in India, and we have also obviously, look, 200 plus crores of our sales this year is from exports, which if you compare to a few years ago has been a phenomenal growth. I would say multiples of what we were, let's say, 5 years ago. Maybe 30. Yeah. At that time, we only had 20, 30 crores. So, 30, 40 crores maximum would have been our exports at that time.
Right. Second point, sir, I just want your the understanding on the Apcobuild. Though it's a small business, but how are we strategizing there? Any vision statement in terms of the distribution ramp up, geography expansion, and how our product is priced vis-a-vis the competition, how the growth rates, if you can just get some more color on that.
Yeah. Yeah, look, our main focus has been in Apcobuild to focus on our strength of the product that we manufacture for the B2B customers. Mm-hmm. So obviously, since we're backward integrated, we do have some advantage there. Distribution scale up is really the challenge in the sort of B2C space where Apcobuild is, and we just want to ensure we do slowly, profitably, and of course we have added some products that we are outsourcing and adding to our product portfolio, but we want to ensure that what we deliver to the customers is at a price point and the quality that's not available in the market anywhere. So we're focused on a few products, and as of now, we are still learning and growing in the western part of India.
Any growth directionally you are looking at in terms of the percentage growth, or how you are going?
Yeah, I mean, look, we have grown at more than 100%. I think 120 to 230% in this in the last financial year, and the way we are adding, I think that growth should be sustainable even for the next financial year. And of course, as the value goes up, obviously the percentage may start dropping. But we feel pretty confident that the business model that we have, being backward integrated and focusing on a few products and a few specific niche applications around waterproofing, I think we feel pretty confident that over the next few years, we will grow our geographically. There's a lot of scope to grow.
Wonderful. Any price differential you can highlight, sir, between?
Mr. Kotak would request you to kindly join the queue for the follow-up questions.
Sure. Okay. Thank you.
Thank you.
Thank you.
We have the next question from the line of Anubhav Sahu from MC Research. Please go ahead.
Hello. Thanks for the opportunity. First of all, wanted a bit of a clarity on the Capex project. As much as I could understand, I think there are two projects which you are looking for a completion by Q3. One is 60,000 ton capacity for XNBR plants, right, at Valia. And the second one is a latex plant, the capacity increased by around 20% in Taloja. Hello?
In terms of total tonnage, it's 50,000 tons at Valia and about 10,000 tons at Taloja as of now.
Okay, it's 50,000. And the one for which we are waiting for EC is the NBR project, right?
Yes.
Okay. So, as far as latex capacity is concerned, your latest presentation 65,000 tons. So, is it the result of debottlenecking you are discussing for the last year?
Yes, we have increased it from 55 to 65,000 tons.
Okay. Okay. So, my another question was on the the sourcing of our imported raw materials. I think for us the key concern is styrene, acrylonitrile. So, is there any change in sourcing these two materials because of the macro challenges, whether it is happening the European side or on the China side, and which are our key sourcing partner or countries? If you'd like to mention on styrene, acrylonitrile.
For styrene, I think styrene, most of it comes from within Southeast Asia and Middle East. So it doesn't come from very far, and we have not seen a major challenge for importing raw materials from these areas. Acrylonitrile, fortunately, is not. I mean, we are a very compared to the rest of India, we are still a small importer. So while there have been challenges, delays coming in, our requirement is not significant compared to the rest of India. Maybe in less than 3-4% of the total Indian imports, which goes into several different applications like ABS, acrylic fiber, right, and so on. So an NBR and nitrile latex, only 30% is acrylonitrile, 70% is butadiene. So that, while that has been a challenge, fortunately, because our quantities are not very high, we've been okay so far. But you're right. I mean, overall, we spend a lot of time these days, much more than we have in the past, looking at all our supply chain and making sure raw materials arrive on time and we have enough, so that the production doesn't suffer.
Right. And that probably, sir, it also explains the spike in net working capital. Probably you're ensuring that the availability remains.
Yeah, I mean, look, it's a combination of overall all raw materials going up. Obviously that causes net working capital to go up. Inventories are higher than what we'd have generally kept. Debtors are higher because the prices are higher. So, it's a combination of overall net working capital has gone up.
Okay, that's helpful. Thanks a lot.
Thank you. Thank you very much.
Thank you. We have the next question from the line of Tej Kumar Pandya, who is a shareholder. Please go ahead.
Thank you. You see, my question is that the trade receivables in 2021 it was 104 crores, and in 21-22 it is 161 crores. As per my understanding, these trade recoverables are an important fact as far as controlling the cost is concerned. If you are able to reduce these trade recoverables, you will be able to on your outstanding and your payment for the loans which you have taken, that will be further reduced. The capital cost will be reduced shortly. Your comment, please.
Yeah. So, Mr. Pandya, the trade receivables have gone up by, as you said, about little less than 60%. But if you see, our total revenue has gone up also by 70% for the year, I think. Let me just find the exact number. 77%. So if you see in percentage terms, actually we have done better in terms of reducing our trade receivables in terms of percentage terms, because revenue has gone up by 77%, but trade receivables have gone up by maybe around 60%. Sachin, do you have the exact number, trade receivables increase in terms of percentage?
So trade receivables.
It's about 60% or less.
60%, yeah.
60%, yeah. So while we understand and we have tried a little bit to reduce the credit period that we give to our customers, unfortunately we are also in a competitive market, and a lot of the imports that come in, give large number of days of LC credit. So we are forced to walk along with the market as of now. Hopefully that will change a little bit going forward. But we understand the issue and we review it regularly.
Okay, thank you so much. As long as you are aware of this issue and you're taking care of it, thank you so much.
We are trying. Thank you.
Thank you. We have the next question from the line of Deepak Shah from Shah Financial Services. Please go ahead.
Hi, Abhiraj. Congrats for the good set of numbers. As usual, it's a sweet complaint. This is just a small drawing that we have been paying the tax by way of taxation to the tune of 33 crores on a capital base of about 11 crores. Plus, we have a dividend payout of about 25 crores, counting your last dividend, what you have declared, of 3 rupees per share, 3 plus 2, 5. So if I count, that is a 25 crores. So we are paying to the exchequer 30 crores plus 25 crores by way of dividend, and on that dividend becomes taxable to the majority of the investors. So can we not address this issue, as every third company is going for a buyback or a buyback of shares or reduction of capital? So can you again not relook at the same, because that has nothing to do with your efficiency of the business?
I understand. Deepak Bhai, you've asked this question multiple times over multiple Concalls, and while you're saying every third company, I'll beg to differ with you. It is not every third company.
It's a good company of our category.
Yes, a few companies are doing it, but in our case, as I've mentioned before as well, that there is a cost to doing this buyback, And if the buyback is not successful, it's an illiquid stock. As you know, we are not as big a company as some of the other liquid companies that you have referred to in the past. And therefore, we didn't see any point of doing a buyback if we are only able to get about 0.5% or 1% of, then it's not a successful buyback. So you're right, we can do it, but there's a cost to it, and it doesn't make sense in the current context. And trust me, we discuss it every 6 months.
Yes.
And we see if it makes sense. As of now, in the current context, it does not make sense, and we would not be doing it.
Okay, but at the same time, if I have to draw your attention, the promoters also can participate. Their percentage of equity will not go down, no? It is in lieu of dividend, right? The buyback of share is
but if the promoters. So Deepak bhai, if the promoters participate and nobody else participates, then what happens?
But still 80% goes through, no? It's a wonderful thing, no? Because the price will be always higher than the buyback price will be little higher than the market price of last, say, 3-4 months, 6 months. So it will be beneficial, no? It is in lieu of dividend only.
Anyway, I think Deepak bhai, you're a well-wisher and you've been a shareholder for a very long time, and we appreciate it. But let us agree to every year. For the last 5 years, I think we've had the same discussion and conversation. We have discussed it with many bankers, thanks to your suggestion, and we have been advised by many people not to do it for practical reasons.
Okay. So it's
that's
just a sweet complaint. It's not a complaint.
If something changes, we're not close to it. If something changes, we'll do it at the right time. But this is not the time for the company to do it.
Yes. Okay.
And we are very happy as a company to pay to the exchequer what is rightfully the exchequer.
But sometimes you feel...
I know you may not agree with that, but that's our philosophy, and that's what we believe in.
Okay. All the very best. Thanks a lot.
Thank you, Deepak bhai. Thank you.
Thank you. That was the last question.
I
now hand it over to Mr. Sachin Karwa for the closing comments.
Okay, I think Sachin is not available. I'm happy to do the closing comments. Maybe he dropped off. So thank you very much. Thank you again. It's been a very eventful year, a strong year for the company, and would like to thank all the shareholders, analysts, and everyone else who's on the call, investors. Thank you so much for your support. We appreciate it. We will continue to strive hard and work hard to keep improving the company's performance and growing from strength to strength. And of course, there will be some good times, some bad times. And once again, we appreciate your support. We look forward to starting the new financial year, and we hope to continue this momentum going forward. Thank you very much.
Thank you, sir. On behalf of Valorem Advisors, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.